Hi, Shantae. Yes, they are. It's super shiny. Can you hear me? Can you hear me? Yeah. Okay, cool. Not really that good. I see your lips moving, but I can't hear nothing coming out. I got my audio up. I just see your lips and then I hear like some noise. You can hear me? You can't hear me? I could hear you better when you lean forward. A little bit. Is that plugged in or is it a Bluetooth? Mm-mm. No, it's like your microphone is under a pillow underneath the bed. Maybe unplug it and plug it back in. Nope. When I do hear you, it's like very, very faint. That's a little bit better, but I don't hear you that great. I really don't want to do this on my smaller device. I hear like, it sounds like the ocean and I heard you very faintly. Are you able to hear anything? Uh-oh, are you okay?
Attempting to switch
Oh, I can hear.
everything over.
Hey, I can hear you.
Perfect. Okay. Can you hear me now, Miss Henry?
Yes, ma'am. Hello?
Okay. Can you hear me now?
Not super duper great, but yes. It says your network bandwidth is low. Now you're on mute. I can't hear you if you can hear me. I can hear you very, very low.
Very, very low.
If you go on the audio
Oh.
system, there, hello?
Okay, can you hear me now?
Yes.
I figured out the.
Uh-oh.
What
Wait,
about now? Is that okay? Can you hear me now?
it says the network bandwidth is low. So when I can hear you, I can hear you well, but I can tell it's kind of like going out.
Yeah, I didn't want to depend on schools. I'm going to try from the main computer one more time. Let's see.
Oh, I can hear you now.
Oh, wow. That's me holding it. Okay. I'm just going to make it work. Wow, 7 minutes in. I apologize. This has never happened to me like this. Oh my gosh. And I'm talking about I've been sitting here an hour literally just trying to get it, just testing and retesting, and it sounded fine, but now that we're live, it's not. So I apologize. Let me bring in our Facebook Live audience. And so am I sounding clear or distant?
You sound pretty clear.
Okay. We're going with this one now. Okay. Okay. So I don't know if the other session is showing and go live, but all right, I'm gonna try to set this up, and I decide hopefully we are rocking and rolling. Trying to restart the video. Okay, here we go. All right, everyone to the 1Hunnid Health Show. I am Miss Wells, your host. This show is sponsored by the Abundant Health Service Company. We are here live every single Wednesday from 5 o'clock, typically to 5:20. Today we're going to go a little bit longer to like 5:30 to try to make up for some of this time that we've lost in our technical difficulties. We're super excited to talk about our guests, the content that we will be speaking about today. Why would we on a health show talk about money and insurance? All right, because as of the latest data that with the completion of this last 10-year cycle, the is no longer emotional health or chemical health or full health. That is now the busiest, one moment. It is now the top. Okay, is everyone able to, are you able to hear me now?
Now I can hear you.
Okay. Apologize. Is it muffled if I put this in, or is it okay now?
It's okay.
Am I coming in clear? Okay. Okay, I apologize. As I was saying, money is now the number one stressor. I'm talking about that brings about physiological stress in the United States. It has surpassed all of the physical stressors, chemical stressors, psychological stressors. Things that, like car accidents or physical injury or things of that nature. Money is now the number one stressor in America. So that is why I thought that it would be a really great idea to have on a 1Hunnid Health Show before we close out January, the first month of the year of this decade, to have a financial wellness coach and expert, Ms. Tylene Henry. So before I introduce my guest, I want to make sure that I just cover just my normal little health plug that I like to start every single show with. I want to make sure you understand why managing your stress and the topic that we are going to speak about, insuring your life, is so important. So there's a hormone in your body, and we loosely call it the stress hormone. It's called cortisol. Cortisol is not something that's just horrible. It's horrible in the sense of when it's prolonged and it doesn't follow its normal rhythm or flow or schedule. So we need it to live, but it has to be managed. When it's not managed, and obviously with the numbers that the latest research studies have shown, we're not managing it well. It can cause tumors. It can weaken your immune system. It has been scientifically proven and linked to increased depression and anxiety. So managing cortisol, the stress, is super important. So, which makes this topic even more important because it is the number one cause of stress now. It is the number one stressor in the United States. So, I need you to get out the health pipeline. Listen, these folks don't care about your health. It's easy to sell you just medications and get you on that pipeline from the office to the graveyard. I'm serious. You can win in your health. You can win in your health. That's why I created this show. Keep it 100 health. So I just need you to, number one, stop tripping on your heart. Stop tripping on your heart health. And number two, I need you to get married. Yeah, I need you to take the vow to not let more than 2 days go by without doing some type of aerobic activity. And then number three, I just need you to walk, like at least, 20 minutes minimum. And you can spread it out throughout the day. So I am never going to let up on the heart health push either. Taking a heart bath literally only takes 20 minutes. 20 minutes. That's it. 20 minutes. You can do this. So you can win. Get out the heart health, the health pipeline, and do not end up in an early grave. So now, without delay, I want to just tell you a little bit about my wonderful guest. Ms. Tylene Henry is an entrepreneur, powerful change agent, and staunch advocate for socioeconomic parity. Tylene believes that her faith, character, and mindset of abundance have been the foundation of her continued success. Tylene has been referred to as the follow-up queen as a result of her 3 P: professionalism, patience, and persistence in developing relationships, and access to resources necessary to create positive impact on the communities she serves. In addition to being a doting mother and aunt, Tylene owns and operates a professional financial services practice and a strategic business consulting firm. She serves as president of the Detroit Area National Association of Black Women in Construction, serves on Congresswoman Brenda Lawrence's Women's Advisory Committee, is a longtime mentor and volunteer with the Rhonda Walker Foundation, serves on the board of Fresh Perspectives Seminars, and is a volunteer facilitator with Youth for Global Health and Social Justice. Tylene enjoys spending time with family, travel, and being of service in her community in her free time. Please help me welcome Ms. Tylene Henry. Thank you for joining me today, Ms. Tylene. How are you?
I'm doing very well. How are you doing?
Great. I'm glad now that everyone can hear me, and I'm so excited to talk to you today. You're my first guest on the show, so I do thank you for taking time out of your busy schedule. I'm so delighted to start the interviews out with you.
Oh, I feel honored and privileged.
Yes. So now I really wanted to make sure, because I myself has been stressed out about this particular topic. I know many others that have been stressed out about this specific topic. So can you just tell us plainly and simply, what is insurance? Like, what is life insurance?
So life insurance is protection for your life. So, typically some insurances just will pay out if you die, but there's some insurances that will provide you a benefit if you live. And so, ultimately the idea is that there's a certain amount of death benefit, and typically the purpose of it is to provide your beneficiary with a tax-free death benefit. Um, some people see life insurance as something to bury them. I really more so feel like life insurance is more so for the people who survive you, and the people who live, and the legacy that you want to continue on. In order for it to be more than just a burial policy or a death benefit, it requires some, planning and strategy to really identify, what are your options and what would you like for your life insurance to do for you.
Wow, okay. I want to go back to something that you mentioned when you started to answer the question. You said the death benefit for your beneficiaries is tax-free. Is that what I understood?
Tax-free. Well, basically, some people use it as a strategy. So depending on, where you are, there can be estate taxes. Usually you've got to have, billions to be suffered from estate taxes. But some people use it as a strategy so that, let's say you're inheriting, millions of dollars of property. Let's say you're inheriting $10 million of property. And because you're inheriting the property, directly to yourself, there's going to be some sort of like taxes assessed. So sometimes when people are doing their estate planning, they're considering the taxes that will be owed. And so that's going into their calculation as far as their life insurance. So they want to make sure that there's enough tax-free death benefit to go towards paying whatever estate taxes might be necessary. So, your life insurance benefit is not subject to income taxes. So that means you receive, if you have $1 million death benefit and you pass away, your beneficiary gets $1 million tax free. Now, if that money is invested and what happens after that point from year to year, of course, there's probably going to be some tax implication. There will be tax implications, but that death benefit is tax free.
Okay, so if I had, let's say, for instance, myself, I'll use that as an example. So if I had, let's say, a $50,000 policy, and I passed away, and my granddaughter is my, primary beneficiary. So that money that's being dispersed to her from the insurance company is not immediately taxed. Like, there's not a tax on the $50,000 that she's receiving from my death benefit right away. Like
correct. And one thing that I will caution, though, because sometimes people do that, they leave money to minors. So, if you're not going to have like a trust created, then you will want to ensure that you designate who the custodian of those funds are going to be. Because often if you, leave funds to a child, whoever their guardian is will typically end up having, some sort of authority over how those funds are used if you don't have another instrument to dictate how you'd like those funds to be used.
Oh, wow. That's good. I'm glad. That's a great point. I'm glad that you brought that up. That takes me actually to my next question. I've heard, just myself through the years that there's like term insurance, or there's different types of insurance. It's like what is the? I heard whole life and then a term insurance. Like what's the difference, or what does that mean?
Okay, so there's several different types of like insurance. You know, when you think about term insurance, when you think of term, it's like a period of time, right? And so
Okay.
typically, you have a term policy that may be for 20 years, 60 years. There are some terms that are annually renewable term policies. So that means that, it will continue on forever. But for the most part, term policies are going to have going to be lower premium, right? Because the risk for the insurance company is typically going to be a little lower because they know that there's a chance that the person isn't going to die during that term. So if I'm 20 years old and I get $1 million term policy, it's very likely it's going to be very cheap for me because the likelihood of me dying, prematurely is very low, right? And so,
Gotcha.
and then there's also, when you think about term, there's the period of time that you have the death benefit for, but then there's also a consideration as far as your premium payment. So if you have like let's say a 30-year term policy, level term policy, and that means that for that 30 years, if it's a level premium, that you're paying the same policy for the same premium for 30 years. Okay.
Wow.
So there's some terms that each year it'll still continue to increase. Typically those terms that will continue to increase each year, they may go on and be annually renewable, but usually what happens is by the time you get to be, 45, 50 years old, the premium is typically a bit more expensive than you may want to pay. And so usually around that 40 plus age in most term policies that I've seen, you see a significant jump in premium. And so whether or not it's still affordable at that time, it's just going to be, depending on what type of planning you've done. And so one of the things that is unique to a term policy is quite often you may have the option to convert that into a whole life. So even though you might start off with a term policy, a lot of young people do that because I'm always suggesting that they address all the areas of their financial planning needs. And so you may start off with a term product, and that term product is typically going to give you the opportunity, depending on the company, to convert it to a whole life product later. But of course, that is going to depend upon specifically the type of policy you're getting and what company you're getting it with. So everything we're talking about is very general because it's really going to be dependent upon, what specific product.
The individual. Oh, okay. Okay. Thank you. That's
All term
definitely
products aren't the same. All whole life products aren't the same.
okay. So they're kind of like shirts. There's so many different sizes that you could actually get them custom made. So that's
Absolutely.
good to hear. All right. Okay, so that takes me into my next question for you is like how can it benefit like you if, like while you're living? I heard you say something in your initial question about it. There are some things that there are some ways that it can help you even while you're alive.
Absolutely. So, with whole life policies, typically the premiums are going to be a little bit more. But what they're doing is they're charging you a premium that they're going to charge you the same amount throughout the course of your life, right? And they know at some point they're going to have to pay that death benefit. So if you have, I would say depending on the type of whole life product, but typically when we're talking about whole life products, that means that you have some cash value that's building. So as you're paying your premiums on a monthly basis, usually by the time you get into around the 5th year of the policy, you start to see more cash to accumulate. And usually I would say if you're going to get a whole life policy, you typically want to look at a mutual insurance company.
Okay.
Mutual insurance company means that it's not traded on the exchange. It means that it's owned by the policy holders. So typically if the insurance company, has some profits, then they have calculations that they use to distribute those dividends to the policy owners, right?
Okay.
And so as you hold that policy over time, typically those dividends will continue to accumulate. And depending on the policy you have to clarify what your access and rights are to the fees that have accumulated in your policy. You know, typically if the cash is there, then you have access to it. Now you do need a strategy, like you wouldn't want to go and just pull every bit of cash out of your policy that you can, because that's going to impact the policy's performance, but that's going to depend on the product that you have. But one of the benefits that I can share is, so, you know, with my whole life policy, I had a period of time where I had some other priorities, and I was able to have the cash values in my policy to pay my premiums for a period of time. So that was one of the options that I have. Sometimes you can have an option in which you might make that policy something called paid up. So maybe I started off with a whole life policy that was $200,000 a year. And let's say I'm, 15 years into the policy and I decide I don't want to continue to pay, or my financial situation change. Typically you can get some options or quotes from the company to make the policy paid up. So maybe that policy is no longer worth 200,000, but it might be a paid up policy that's worth 30 or 40,000. But no longer do I have to continue to pay premiums, and that 40,000 is still there, and usually it will continue to grow as well.
Oh, wow. That's amazing. So, okay. So it's not just burial insurance. Like, you just pointed out, there's several ways that it can benefit you while you're still living, you and your family.
Another way that it can benefit people, and it really just depends on their financial positioning, is quite often it can be used in a retirement strategy. So depending on what your tax bracket is, let's say you're in a situation where you're continuing to pay more and more taxes as you continue to earn more. Typically people like to use the whole life policy as a way that they can accumulate some cash that they wouldn't have to pay income taxes for if they were to take loans out of that policy or pull cash out of it. So if you imagine being in retirement, most of your retirement money may be in a 401k or something that's tied to the market. If you start retirement out in a year that the market is down, if you had a couple of years of what you would need to live off of accumulated in your whole life policy, then you would be able to leverage those dollars and leave your money in the market until it recovered. And so sometimes it's used as a part of a retirement strategy. And typically we find that amongst people who are high income earners and in higher tax brackets, they're looking to put more significant premiums into those policies over the course of time, in which they accumulate, quite large sums of tax-free money, basically.
Oh, that's
I'm not going to say tax-free not in every scenario, depending on the scenario, but in most cases, they can access and leverage those dollars.
Great. But for many people, especially for many Americans, this would be the first time that they've ever even heard this concept. So thank you for keeping that all the way 100 with us.
Seriously.
We like keeping it 100. Seriously. That is great news. Like, I'm excited to hear that, because there are some of us that plan to be high income earners in the future. So thank you. I appreciate that. Okay, so then that takes me into my next question, which is like, so then how do you go about obtaining that? Like, how do you, what would be one of the first steps? Like, how would you even go about getting a policy?
So, there's several different ways. Everybody is different. Some people want to know what time it is, and some people want to know how the clock works, right? And so one of the things that I think is important is speaking with a professional, someone that you trust. Some indications of whether or not you're speaking with someone that can really help you is, anybody who comes to me and says, hey, I need insurance, I have several questions to ask them. So it's not just giving someone a policy, it's finding out, what do they want that policy to do? How long do they want that benefit to be available? What is their cash flow as far as what's a feasible, premium for them? You want to know about their health, right? You want to know, is it going to be likely that, because I could give someone a quote at the highest health rating, but I know that, if I know that they've got, Crohn's or something else going on, then I want to make sure that I'm giving them a quote or an estimate that's going to be, somewhere around what they might actually be paying. And so there's questions that have to be asked. And you want to know, what do you want it to do for you? If you want it to pay off your mortgage, you want it to make sure that, the folks who are relying upon your income can have some income for a period of years after you pass away. If you want to make sure your kids have money for college. If you want to make sure that your spouse, who is relying on both of your incomes, even if you don't have children, is able to continue to stay in the home that you live in. There's these different considerations. So one of the things that I like to do and share with people who may not feel confident enough to have a phone call or conversation is there's a nonprofit organization. The website is called www.lifehappens.org. And at that website, it has life insurance calculators. And so basically it takes you through a series of questions that ask you, what would you like this life insurance to do? How much would you like to go towards be available for your burial? Do you want to make sure any debt that you have is paid off? Do you have, any philanthropic, things that you're interested in that you'd like to give to? So it asks you these series of questions, and then it will populate a figure for you. Once you have that figure, typically a professional can assist you with reviewing your options and then identifying what might be right for you at the time.
Wow,
so that's like the first step, is figuring out how much do you need, identifying what's your budget, and then you go from there to, apply for the coverage with an insurance company. And quite often, most insurance companies are going to have you go through some sort of, nurse visit or medical exam. There's companies you can go online and get an insurance policy in, 20 minutes or something like that. Typically, any, insurance company that has a good history of claims paying ability, and a good history of customer service with their insureds and clients, you're going to have some sort of process in order to apply, because they have to make sure they know what type of risk they're taking on. And so you want to make sure that the company is doing their due diligence, because that impacts their ability to pay the claims.
Hey, thank you for sharing that. And I know personally that you do make sure that you ask questions so that you're clear on what a person's, desire or goals are. And I recently went through that initial process with you myself. So she is telling the truth for sure, which is great. And it's a comforting thing to know that someone is actually taking the time to actually ask you questions and to see, what will be the, a best fit for you according to what it is that you're, desiring. Okay, so then now that takes me to my next question, because you spoke about there's a health exam. So, I can definitely say I've heard this a lot, even in my own family, in my local community here in South Florida. There are a lot of people that believe that just because you're sick or if you're overweight, that, or if you're at a certain age, that like life insurance is just not possible at all. So like, is that like just hearsay, or is that like true? Like you just,
I think it's really hearsay. You never know until you actually apply, right? There are people who have had cancer before that get life insurance policies because they've been in remission for several years. So the better we are with kind of like how they determine your how long you may potentially live based upon different health conditions and things like that. As they gather more data and research, they actually continue to extend out the mortality table. So as we know, we're living longer. And so one of the things that I've noticed is I've even talked to people who had a term policy that they bought 10 years ago, and we were able to get them a new policy, and they may be paying less because 10 years ago, however they were assessed from either a health standpoint, or maybe the mortality tables went out. There are times when, you might find, especially when you're looking at a term product, right? that you might find a better rate. But one of the things is, though, the older you get, typically the cost of insurance goes up because you're getting closer to, the time that your life would be typically ending on average. But like I said, as we live longer, depending on when you got your policy, you may be in a position where you might identify a product that may be priced.
Okay. Thank you. I'm not sure why I'm having a technical difficulty. I do apologize right now. Okay, I think we're back. We're back strong. Thank you so very much for clarifying that. I think sometimes also when people who, let's say they have certain like controllable factors like weight or maybe smoking or drinking, they're afraid they figure like, hey, why bother? They probably are going to turn me down. So weight doesn't automatically preclude you from, even if it means you have a higher, premium rate, that doesn't necessarily mean they're just going to automatically turn you down because you're overweight or obese. Is that what I'm hearing? Mm-hmm. Okay. So it's worth it to at least just apply and see, there are options that are out there.
Absolutely. Okay. Absolutely.
Perfect. Well, thank you so much for clarifying that. Okay. So now I'm sure that's on somebody's mind and somebody who's going to look at the replay of this or see this on Facebook Live, as many people do, tune in to it after the show has aired. How does life insurance, like what's the connection between life insurance and wealth? Like how are the two like related in any way?
I mean, life insurance is the most cost-effective way to leave money behind, especially when you plan properly. So, many of the financial planning clients that I have, ones that look at all their entire financial picture, not just, the risk management or the investments, they have some type of idea of what type of legacy that they want to leave behind. And so they start planning for that in advance. They don't wait until when they're retired to say, okay, I want to get some insurance now because I just learned that my employer coverage is going to be too expensive, or I can't take it with me now that I don't work for the company. They start thinking about that in advance, and it's because they've talked to a professional and they've typically gotten the heads up that, hey, let's look at your employer benefits. Can you take these with you when you retire? And if you can, is it going to be cost effective? Is it going to give you the coverage that you need? And so that's one of the pieces. You're literally paying pennies on the dollar to be able to provide a death benefit at a later point in time. And the sooner you do that, the cost of insurance is lower for us the younger we are. So many of my clients that have had who went out on a limb, sometimes people say, I don't need a financial advisor because, I don't, I don't have a whole lot of money, or I've got credit card debt, or whatever the case is. A conversation doesn't cost anything. And you might be surprised at the information that you learn that will help you to make more informed decisions. So people that I've sat down with folks that were like, wow, if I knew that I could get some term insurance so cheap, I would have gotten this a long time ago, right? But they thought it was going to be expensive. Well, if you had gotten it a long time ago, it would have been even cheaper than it is now, right? If that's what's a proper fit for you. And then as well, people get coverage for their children, and people are like, oh, I wouldn't want to get a coverage. It's not for your child in case they die. It's really for them as they live, because most companies are only going to let you have a whole life policy for your child. Some of them will sell term, but for the most part, you would want to get something that was whole life for your child. And it's something that's growing over time. So it's like an asset for them. So I have grandparents that call in and say, hey, we such and such just had a baby, want to get the same policy. And typically they're getting enough coverage that child is going to have some additional purchase benefits in the future. So that means their insurability is protected in such a way that if they had any medical concerns that will prevent them from being insurable, they now have this policy that when they turn 20 or whatever, if they want to get some additional death benefit to make sure that their family has protection, they can do that without medical underwriting up to a certain point. It's also an asset in that, maybe they get to be 30 or 40 years old and they've got, 10 or 15,000 in there, and they're able to use that for, a down payment on a home or something like that. But the idea is that it's an asset and something that you've done strategically in advance. Some families, depending on what their disposable income is, they use that as one of their strategies for putting away money for school. So, they're putting, money into this whole life policy so that, if they need to leverage some of that to help pay for school, they can. But if the kid gets scholarships and things like that and they don't need it, that's just an asset that's going to continue to grow. I'm not saying that your whole life policy should be your only, strategy to save for education. It really depends on your situation. But typically when we're looking at folks that want to have some different options as far as, opportunity for growth and guarantees and things like that, whole life is typically a part of some of those strategies. So, there's definitely opportunity to leave a legacy with it, but the more leverage you have is typically earlier in life, because you're going to have less, chances of having any medical concerns. And, the longer you have the whole, something like a whole life policy, then the more time you have for it to be the cash value to grow.
Okay. Well, thank you for clarifying that. So could you give us that site again that you mentioned, and also tell us how we can follow you or get in contact with, just to get more information, or if anyone was interested in, talking to you, about your specific needs, how can someone get in touch with you?
So it's www.lifehappens, LifeHappens.org. So that's the nonprofit organization that has lots of great information about life insurance. There's lots of different types of products. We talked about the two main types of products, which is the whole life, which you own and you have it for your entire life and is more of an asset. The premiums are usually a little bit higher, but it's the same amount throughout the period of your life. You might pay it for up until age 65. You might pay it up till age 100. You might choose a 10 or a 20 pay whole life. There's options there. And then we talked about term insurance. Though you can find information about those policies there. And again, like I said, it's good to talk to a professional, someone that you trust, so that you can really tell them what it is that you want, and they can help guide you to make an informed decision around, what type of product would be the best for you. And then as far as getting in contact with me, my website is www.tylenehenry.com. All of the stuff that I'm, involved in is there, but also there's a link regarding the financial services products that I provide. And then I can also give you my telephone number, which is 248-980-5498. And typically, a conversation is free. What I like to do is I send people out a confidential form that just asks a little bit of information about them, what some of their goals are, what their interests are, which helps me prepare for our introductory conversation. And I really just like to learn about people, what's important to them, what are their goals, not just financially, but what are your personal goals? What are your professional goals, in addition to your financial goals, because they definitely impact and intertwine with one another. And when you're working with a financial professional, it's not like it shouldn't be a transactional thing. You really want to develop that relationship so that as you grow in your career, as your family grows, as life happens, as great things happen, things you don't plan for happen, you have someone that you can turn to, that you develop that rapport and that trust with, and they can be able to guide you. And I don't know everything under the sun. I'm not a tax attorney. I'm not an estate planning attorney, but I have a team of professionals that I work with that I leverage when my clients need that area of expertise. And that's the most important thing, being able to access that information when you need it.
Great, I agree. I also have a link to her website on the site, the way that many of you found me. So I will also make sure that I include the number as well. So I thank you so very much for taking out your time and closing out this month with us. Are there any closing thoughts or anything that you'd like to share?
Absolutely. I would just say, I think the most important and key thing that folks can do is to take action. A lot of times we say what we want to do, what we'd like to do, what we're going to do. But you've got to take action, and you've got to hold yourself accountable for aligning your actions with your intentions, because it's too late when a lot of times it's too late when that diagnosis comes or something happens, right? It's better to be proactive, and it really can be a load off to get that thing checked off the list, right? And know, what is it going to cost? There's times when people get insurance and maybe it costs a little bit more, as you mentioned, like if there's weight or if there's diabetes or some type of health concern, it may cost a little bit more, but there's often opportunities for reconsideration. So sometimes underwriting will come back and say, hey, this is going to be a rated policy, but come back to us in 2 years and we'll do a quick nurse visit. And if these things have improved, whether it's your A1C levels or whatever it is, then they can be reconsidered for a better rating, right? And so you just don't know those things until you try and you take a look at it and see what is out there for you.
I think everyone can hear me again. Okay. Well, thank you so very much for sharing that with us. And I hope that this won't be your last time sharing, your great area of expertise. I just really want to encourage you guys, instead of being stressed out about your finances or stressed out and overwhelmed about, making a decision for insuring your life. I've already covered how it impacts your health, why you need to address this area, because it is the #1 stressor now in the U.S. It has surpassed all the other physical factors, money and financial planning and worries. That area alone is impacting your physiological health. It does matter how you manage your stress. And Ms. Henry just gave us some practical things that we can do to address that area. It does not have to be overwhelming. It does not have to ruin your life or overwhelm your life, your family, or negatively impact your health any longer. There is something that you can do about it. And so we want to thank you so much for being on the 1Hunnid Health Show, episode number 5.
Thank you for helping me, and thank you so much for putting me on the 20-minute love. So I've got my hashtags out there when I get my 20 minutes in. So I really think what you're doing is really wonderful, because it's really important to get the community engaged and, help people understand that it's just taking one step at a time. We get overwhelmed when we think about everything together.
Yeah, everything.
But it's not any one thing that made someone successful. It's the small things that we do over time that create that success. So thank you so much for all your encouragement and support. What you're doing is amazing.
Okay, well, thank you. We definitely look forward to speaking with you later in the year or this decade. So this is Ms. Wells and Ms. Ty Henry, financial wellness expert and coach. And again, if you want to get in contact with her, you can reach her at 248 980-5498, or you can check her out her site, www.tylenehenry.com, or the link is directly on my site, which is how many of you, if you're tuning in now, you found it. So, and I'll also put it on our 20-minute love page, the Instagram, TikTok, all of our social media. I'm going to share her information as well as this episode. So For those of you who are watching it later, share it with somebody. Thank you so much for joining
you're very
us,
welcome.
and have a wonderful day. All right, this has been 1Hunnid Health Show. Let's keep it 100. Peace. Good night, everybody.